Good weekend, all. Ira Epstein, and here we are with your weekend edition of your financial market wrap-ups for this Sunday, the 29th of June, 2025, about 6:10 p.m. Central Time. I wanted to wait, see if there were any events we should talk about that's going on. You know, you never know what's going to happen with these tariffs and so on. What I can tell you is you're going to get the Chicago PMI numbers tomorrow morning at 8:45. They're expecting 43 versus last month's 40.5, and we get the Dallas Federal Reserve regional manufacturing outlook, and you had a big negative number the month before. We'll see if that can improve. As for tariffs, a lot of news on that. As you know, when you look at the Canadian dollar, the president basically pulled the rug under the market when he said, I'm not going to negotiate with tariffs anymore with them. They're going to get a number from me. They can either deal with the number or not trade with us. It's that simple. Okay, you know it's more than that, and you know what this is all about. It's the digital tax that Canada didn't just announce. This was announced what they wanted to do a long time ago, part of their ploy to deal with the president, of companies that like Google and so on that do business in Canada. If they do over $15 million worth of business in Canada, they want a 3% digital tax. And they want it reciprocal, going back to when they announced it. It's quite a bit of money. And it's their maneuver on it. So do I think it'll go through? Frankly, no. Do I think it's all negotiation? Yes. And we have a ways to go with it. So what do? They're right on our border. You don't need this. I wish the two countries would get together. I don't know. I was at lunch the other day, and I was talking, and I said, you know, we used to go out, and in the summer, with Canadians everywhere. You don't have them in Chicago now. And it's just a shame that that is all happening. What can you do? I can't control it. I just live here. When we're looking at the metals, well, they're also looking at the dollar down, and they're not responding. The problem is the vacuum cleaner. The vacuum cleaner in the room is the stock market. The fear of missing out. Now, I heard some analysts talking, they don't think that's it. It's rotation. Nonsense. It's fear of missing out because the market just keeps going up. I raised my hand. I thought that when we got down on April 7th and had the bounce off of it, that we'd retest or have another break. I never expected this type of rally that we had. I'm sure there were analysts that did, and I heard a couple of them that did say that's your low, but to a man, they thought you'd get another correction, not almost a straight up rally in the indices themselves. And it's left people out. Now that it's making new highs, they're going, where do I go? That money pulls some of the air. It has been out of Bitcoin, but I think Bitcoin is basing again. That's one of the things I'm looking at. I am very bearish in the dollar. I still think it can get under the 90 level longer term, unless something with the tariffs change and it gets a bid all of a sudden. On the energy markets, OPEC is going to meet now. That's coming right around the corner here. And I don't see them not producing more oil. I think that they will. And as you can see, even with the heat that we're getting again, and there's plenty of heat, Chicago is today basking out there, you're still taking the markets basically lower. Bonds and notes sort of just sitting. So as we take a look at a monthly chart, and this is a monthly of the S&P, you're up 5.5% for the month. Tomorrow's not Monday, but Tuesday will be where we come to an end, as you know, in the market. It's getting very fascinating now, all right? June 30th, and then we're right into the month, as you know, of July, and wow. The 4th is staring you right in the face. We'll see. But this is one heck of a gain that the market had. And a rising tide lifts all ships. So most stocks have been coming up. You can see how the market, when you come to the weekly area chart, following suit. And it finally is now closed over. This is a new record high close on a weekly basis that you got out of the market on Friday, and you're following through a little more. You know, I have a piece of work that would say that if this was the sideways action, and this itself doesn't meet the point, you'd have to break down again here, and then say that's a shoulder to that. There's a measurement tool I use, and it could carry this market up quite a bit if that were the case. It's not there yet, but it could develop. You have higher lows, higher highs, and this is what I was saying. That April 7th low, that's not really a correction. These are small breaks in the market. And you didn't correct enough. You had 1 week bounce and that's it. It's been basically a nonstop rally in the market. I'm not crying about it. I think it's great for America. It's great for your 401k. And you can see how the market has just carried itself straight up. It's over all the key moving averages. So the resistance is here, the Bollinger Band, and instead of hitting it, it's arcing higher with these gains. It's now at 63.42. So that would be the next resistance. That's 100 points from here. So I think it's somewhat out of play in the short term. What I am looking at is the embedded readings that are happening here. The fact that the market's already made a higher high than last week tells me traders want to buy the market on breaks as long as this stays embedded. The question is, what's a break? And the question is, do you do it right now? And I'll cover that in my subscriber videos. And subscriber are the people that pay me money in the morning to tell them what to do in the markets, where to buy, and so on. This is a very general video. As you can see, the Dow is a similar pattern, but not the same. You have a lower low, this low right here with its arrows under that, and a higher high. In the NASDAQ, you're more similar to the S&P, higher lows, higher highs, record high close, embedded reading, still in the bull camp. Look for the Bollinger Band to be a resistance point. And the Russell is overbought, more like the Dow, trying to get up to the upper Bollinger Band at 2241 to find its resistance point, and nowhere near all-time highs at this point. So it's still the laggard. It is coming alive. That's the nice part. And if interest rates were to really start dropping and the Fed starts cutting, you have to have this on your radar scope because that's the market that'll get the benefit of that right off the bat. And that's at least what I would think. In the DAX, higher lows, higher highs, never could make it back down here. You still have the embedded reading. It never owed getting back there. It's still, to me, on a tear to the upside, and you could be going up to the 46.37 level. In the 30-year bonds, I have not joined in the bull camp. All you keep doing on a weekly chart is coming back to the 18-day average of closes. For those of you that have watched me regularly, that's what we call the line in the sand. On charts, analysts like to have a zone in a market that's a delineation point between where they're bullish and bearish. Think of it as a filter. So if you had all your work that is bearish, you're making lower highs, but you're making a higher low, that's not a trend. Where's the delineation point still? It's the 18-day average. The market's having trouble not only getting over it, but staying above it. So that's where the pros are looking, that on bounces, that's the resistance point. And for the reason that the moving averages offered that resistance. That's not the case in the 10-year. It's the opposite. Higher lows, higher highs. So the curve yield's making certain maneuvers here, giving you an idea that as you move in on time, closer to 2-year, the market is starting to act more and more like the Fed's going to do an action. Now, the Fed's actions really don't impact the 10-year or the 30-year. They do. The 6-month, the 1 year, the 2 years, those you always look at. In the dollar index, if interest rates are falling, if our public program keeps going the way it is, public being the trading bills, or maybe I should say the budget bills that the president has, the marketplace looks at this as a negative. Now, as you know, the stupid Senate, I want to say that, the stupid Senate has a crazy rule that is just for the benefit of making life difficult for the senators. To read 940 pages, every word in the document, why couldn't the members just say, we accept it, and they go into debate? But if you're going to have that, what I call stupid rule, they should make it not so stupid. Make the whole chamber sit through all the hours when they say you got to read the bill in, and let's see how they would do with that rather than wasting everybody's time. We know it's a delay tactic. We know why it's being done. And it's crazy to have those type of rules. I don't think it benefits anyone. Get to the point. The vote's going to happen or not happen. This is all about they can get it read. It delays things for another 18 hours or whatever it takes to read that in. Then they'll be up all night voting. But they don't just vote. Now they all want to go on record because midterms are coming. Here's what I have to say about this. Politics at its absolute worst in America. Lower highs, lower lows. You can see how the market just draining away. I don't see anything bullish on that chart. And if that's bearish, the euro's bullish. And you can see the market's continuing to lift itself up, and at the same time has what I call that bullish embedded reading, embedded and locked in. And that often accompanies new highs, and that's what you're getting. In the Canadian dollar, on the weekly chart, you held on. The daily chart is where the negative happened. I was so pissed because I like the Canadian dollar here, and it got hurt, and it held on in the weekly chart. So what can you do? Who saw that the president was going to say anything? I certainly didn't know that was even on the table for him to comment. In the end, you still have a pattern of lower highs and higher lows. So you got a market that's narrowing in like that. But I think everything gains on the dollar here. In Bitcoin, I doubt that you're going to be able to get back into this range from the 18-day average back down here. In other words, trying to get back to 77, 78,000, I don't see it. I see a market that's basing out trying to say, hey, I'm going to get another leg to the upside. What'll cause that to break out, I don't know, but we'll figure it out. When you look at Brent versus WTI, it certainly got down into the low area here, and the differential is narrowing in now on a pretty good basis. You do see that. So let it come up there. $3 is the differential I'd look at to be a problem. It's $2.92. Look at what they did last week in this market. You took this market from 81.40 to 66.81. Now, we know a large part of that was the bombings that went on in Iran when the U.S. joined in. I keep hearing from more and more sources that our mop bombs did not work. I know I'd expect our government to say they do, but the UN Council, there's different ones that I'm listening to and others. I want to hear what the Israelis have to say and if we can get other people on the ground. But I got a feeling that those bombs that were supposed to do the job haven't done what they said. And if Iran keeps opening their mouth and saying we're going back to uranium development, well, Israel can keep hitting them above ground till they weaken them so much that even if you can get the bomb, how would you deliver it? In other words, go after all the missiles. They're not underground. WTI, higher high, lower low. And by the way, you know the president's holding Israel to not do anything, but he's watching. And every time the Ayatollah goes, we're striking, we're going to do them, he gets countered by a foreign minister that comes out and says, there's serious damage, you put our program back. They're trying to give the balance there for it because you can fire the minister 1, 2, 3. They won't. They know what he's doing, and they're playing their own game for their public. Lower highs, lower lows, and where are you fighting a battle? Right here at the 18-day average. That's what it should do. What's the pattern of the market? There is none now. You've got that higher high, lower and low. It's an outside week down. Do you know how to work with outside weeks? It's very important. Outside weeks, like you have another one here in gasoline, you've got to pay attention to what they do and how they do it. And with that in mind, I want you to always remember, you can take a look at our free offers and get a basics as to what they mean, where they're at, technical studies, how do you work with everything. We have a page. You go to iraepstein.com, and on the page, which is here, you'll see these blue areas. Just give one a click. And each thing you want goes into a cart for you. Go into the cart, fill out the information, we'll get it. And typically within 48 business hours, we get everything right out to you. So there's so much to choose from. See the charting software, newsletters, price counts, my newsletters, free access to try things out. It's all there. iraepstein.com free offers. I'm Ira. I'll catch up with you in the other videos tonight. And of course, first thing in the morning, when we look at the morning flash update. You take care.